Hello, and welcome to my channel, The Entrepreneurial Mindset. My name is Jay Berman, and today's presentation is Ownership and Taxation. So as today's topics, number one, we're going to talk about sole proprietorships. Number two, general partnerships. Two types of liability companies, one for a single owner and the other one for two or more owners. And the fifth topic we're going to talk about is taxation, particularly introduce you to the more common IRS forms that you will need to fill out when you are a small business owner, entrepreneur. So what is a sole proprietor? Well, you are basically the business owner. In other words, you own 100% of the business. When you decide to start a business, it's probably a good idea to get what we call an employer identification number or EIN number. You can just go to the irs.gov website and get one. You're probably familiar with an employee identification number. If you work for somebody else and you get a W-2 every year to file your taxes, there's usually an employer identification number on your W-2 stub. The great thing about an EIN number is that it protects against identity theft, and it also separates your personal finances from business finances. So if you have to do business with another business and they require a social security number, you can give them your EIN number. This way, again, it protects your social security number, and it's really very helpful when it comes to protecting you against identity theft. Once you have an EIN number, then you can register your business with your state. Usually it's the Department of State is the name of the department, and you pay a small fee, maybe $25 or $50 or something like that. It's usually not expensive to register your business with your state. Once you register your business, you can then open a business checking account, and then you can either manage your business out of your own home. Otherwise, you maybe have a home office, or you can get a shared office space. So let me digress for a minute to explain what is a shared office space. What's nice about a shared office space is that it gives you a business address which separates you from your home address. Usually in a shared office space, you get your own office, which is basically a desk and a share. There is a common or shared reception area with office equipment such as a printer or a copier. There's often a common or shared conference room, which is perfect for meetings. You can also collaborate or network with other entrepreneurs. They're usually not too expensive. I live in Boise, and there's a shared office space only a couple blocks away. They advertise $75 a month. It could be a little bit higher than that. Again, in your area, just do a Google search and type in shared office space, and there'll be a list of companies that offer those type of services. Now, suppose you want to go into business with somebody else, like a family member, like a sibling, a cousin, or maybe a friend. In that case, you would probably want to form a general partnership. In other words, there are at least two owners, and each one is called a general partner. And again, the same process is very similar to a sole proprietorship. You should apply for an employee identification number. You register your business with the state. You pay a small fee. It's probably a good idea to have a partnership agreement. In other words, it spells out the duties of each partner, who's going to handle which business functions such as marketing, sales, operations, finance, accounting, those type of business functions. And then once you have an EIN number, again, you can also set up a separate business checking account, and you can also run your business out of someone's home, one of the partner's homes, or again, you can perhaps rent a shared office space. The next ownership structure or form would be a limited liability company. There are two of them. One is for a single member. In other words, there's just one member, so you are the 100% owner of the company. Again, you want to register your business with your state and you pay a small fee. Generally, LLC is a little bit more expensive than a sole proprietorship or a partnership, but usually not that much more. Again, you want to go to the irs.gov website. You want to get an employee identification number. With an LLC, you probably want to fill out an articles of organization and an operating agreement. Again, it's probably a good idea to speak to a lawyer about those two documents. With an LLC, you want to separate your business finances from your personal finances. So what you want to do is you want to separate, you want to become a separate legal entity, and you do that by having a business checking account and a shared office space. With a sole proprietor or a general partnership, you can either have a home office or a shared office space. But with an LLC, you really need to separate your personal finances from your business finances in order for the LLC to be legitimate. So I would recommend having a separate business checking account and a separate office, a separate business address. And probably a good inexpensive way to do that would be have the shared office space, which I explored earlier. Now, in case you want to do business with somebody else and perhaps you want to have something a little bit more sophisticated or elaborate than a general partnership, you can do a limited liability. This way, you would have at least we have to have at least two members. Those would be the owners. Again, same process. You register your business with your state and you pay a small fee. Again, you get an employee identification number, articles of organization, and operating agreement. And again, for the business, get a separate business checking account and a shared office space. So LLCs are great because if the business borrows money, then you are personally not liable for those debts. The business is liable. That's why people prefer to get an LLC in case they borrow money. It does protect does protect your personal assets when you form an LLC. But for the LLC to be completely legit, to be completely legal, it has to be, your business has to be completely separate from yourself. And in order to demonstrate that, you need to have an articles of organization, an operating agreement, a separate business checking account in the business's name, and some sort of an office space. So the next thing we're going to talk about is once you set up your business, either as a sole proprietor, general partnership, and an LLC, let's talk about taxes. Taxes is probably going to be one of your biggest business expenses. The government, both the federal and the state, will take close to 30% of your net income. And there are certain procedures to pay those taxes. You usually have to pay them in advance over a year period. So let's first talk about the sole proprietorship. So throughout the year, you have to pay estimated quarterly taxes. In other words, you're paying your federal income tax, and the SC stands for self-employment tax, which I'll talk about in just a second. You need to fill out a Form 1040-ES and set up an account with the IRS. If your state has an income tax, which about 45 states do have some sort of a state income tax, you'll have to pay estimated income tax on your business income, if there's any, the net income. On the federal level, you should be familiar with the Schedule C, where you record your revenues, expenses, and your net income. Anything over $400, you have to pay self-employment tax, which includes Social Security at 12.4% and Medicare 2.9%. So in other words, when you work for somebody else, you pay half the self-employment tax, your employer pays the other half. When you are self-employed, you have to pay the full Social Security and the full Medicare. You should also be familiar with Form 8829, business use of your home. So if you are running your business out of your home, you can deduct either your rent or a mortgage, a certain percentage as a home business deduction. For a general partnership, again, you have to be familiar with the 1040 ES. The partnership does have to pay taxes throughout the year. So if you remember, if you as an employer, those taxes are taken out of your paycheck. Well, when you are self-employed, you have to pay those taxes directly to the IRS. So you need to be familiar with the 1040 ES form. Again, you have to pay estimated state income tax depending on what your state requires. Now, with a partnership, you do have to fill out a Schedule K-1. It's also called a Form 1065. This is an information return. This is where the partnership records the revenues, expenses, and net income. However, you report your share of the net income on your Form 1040. So let's say the partnership earns $100,000 in net income, and there are two partners. Partner A would put $50,000 down on his or her 1040 income tax return, and partner B would put the other $50,000 on his or her Form 1040. Again, you also have to pay self-employment tax if the net income for both partners is over $400. Again, you pay the self-employment tax, which includes Social Security at 12.4%, and Medicare, which is 2.9%. Both partners have to pay both because you're both considered self-employed. For a single member LLC, the IRS does not recognize an LLC, but therefore they require you to treat the LLC as a sole proprietor. So it's the same thing as filling out the tax forms you would as a sole proprietor, even though on a state level, it's an LLC, only because it's the states that regulate the LLC qualifications, not the IRS. So again, you have to fill out a 1040 ES, pay your quarterly taxes, pay your estimated state income tax. You fill out a Schedule C. You fill out a Schedule SE, where again you pay the self-employment tax, Social Security, and Medicare. For an LLC where there are two or more members, the IRS treats your business on a tax level, a federal tax level, as a partnership. So the same requirements to file taxes as an LLC with two or more members is exactly the same as a partnership, because the IRS treats the LLC as a partnership. So again, you fill out a 1040 ES, you do fill out a Schedule K-1, and you also fill out a Schedule SE in order to pay the self-employment tax. So there are estimated payment dates required by the IRS. I got this off the irs.gov website. So in the first quarter, you pay whatever estimated tax on your net income and self-employment tax. You pay that first quarter is April 15th. The first quarter is January, February, March. The second quarter is April and May. The due date is June 15th. Third quarter, June, July, and August. That due date would be September 15th. And the fourth quarter would be September, October, November, December, and that is due on January 15th. It's very easy to pay estimated taxes. You open an account online with the IRS by going to irs.gov. Again, your self-employment tax is going to be 15.3%. This again includes Social Security and Medicare. In terms of federal income tax, I recommend you budget 10% of your net income to pay the estimated tax. Again, it can be higher or lower than that. Your first year, you're kind of just estimating what your net income is going to be. So you're kind of estimating what your net income is, estimated tax is going to be based on that net income. Your state income tax can be, let's say, 5% of your net income. So if you include the self-employment tax, federal income tax, and state income tax, you're paying 30% of your net income just in taxes alone. Your goal for every year that you're in business is to pay 90% of the income tax and the self-employment tax, 90%, in order to avoid paying penalties and interest to the IRS. And these are my recommendations regarding ownership and taxation. I recommend you learn perhaps Microsoft Excel, maybe Google Sheets, or maybe QuickBooks to record your revenue, your expenses, and calculate your net income or net loss. If you have a net loss, then obviously you don't pay any taxes. But your net loss is always going to be zero. Okay, if your net loss is $1,000 or $10,000, $100,000, the IRS doesn't care. They zero it out. It's always going to be zero. It's probably a good idea to get some knowledge, an education, maybe take a course or YouTube videos on financial accounting. And financial accounting, you'll learn the income statement, the balance sheet, and the statement of cash flows. So you should be familiar with those three financial statements. And it's not like you have to spend $1,000 or $2,000 on a financial accounting course. You can probably take financial accounting at your local community college. You can probably watch a lot of videos on Rumble or YouTube to be familiar with financial accounting. Or maybe you can go out to Barnes & Noble, buy a book on financial accounting, teach it yourself. So it's really not that hard and not expensive to learn financial accounting, but it's extremely important for you as the business owner. It's probably a good idea to hire a good certified public accountant, a CPA, to plan a tax strategy to help you lower your taxes as a business owner. And you probably should have a lawyer to help you fill out the LLC operating agreement or a partnership agreement. And that's my presentation for today. If you have any questions or comments, please use the comments section. Subscribe to my channel for more educational content about entrepreneurship. Again, my name is Jay Berman, Entrepreneurial Mindset, and I thank you for watching and have a great day.